If you're tired of all the confusing ICT trading terminology such as breaker blocks, premium discounts, liquidity sweep, and you just want a simple trading strategy to start making you money right now, then please watch this entire video because I'm going to be sharing with you the easiest and simplest trading strategy that I use on a daily basis to make me money. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Okay, so in this video, I'm going to be sharing with you one strategy that's very simple and straight to the point. The concept we'll be discussing is Fibonacci, but before I show you how to use Fibonacci, what is it and why is it important? So pretty much what Fibonacci is say price is in a strong uptrend. As traders, we don't really want to try to chase this to the upside. So with using the Fibonacci retracements, this helps us understand where price could potentially pull back to, and then from there we can start looking for an entry. But I want to go ahead and just show you like truly how important these levels are. So looking at SPY, if we go to a monthly time frame, and I ended up making a video the day before we ended up hitting this level. Well, the whole reason that we bottomed out right here at like this 348 level is because if we take the COVID low back up to this high point right here and we put on the 50% retracement, well, we can see that the 50% retracement was pretty much that low right there before we rallied into new all-time highs. So that's just a really good example. Don't believe me? Let's head on over to QQQ and do the same thing. Go to the monthly time frame, take our Fibonacci retracement tool, use that COVID 2020 low, and then take it up to that high point right there. And as you can see, price held that 61.8% retracement as support before moving into a new all-time high. And if you still don't believe me about how important the Fibonacci retracements is, let's head on over to Qualcomm. Same thing on the monthly time frame. But what I'm going to show you in this video is how to use the Fibonacci retracements on all these different time frames. You don't have to only use it on the monthly. So looking at Qualcomm, same thing. Let's take this low point right here to this high point right here. Well, what did price hold as support multiple times? That 61.8% retracement. And now look at Qualcomm. New all-time highs. So again, when we're using Fibonacci retracements, it's helping us understand where price could potentially pull back to and potentially give us an opportunity to hop into a trade and follow the overall trend. Okay, so now that you know what Fibonacci is and the importance behind it, let's talk about how to actually start utilizing this tool. That way you can start making money. So the very first thing that you want to be able to identify when using the Fibonacci retracements is you want to understand the overall trend. Is price in an uptrend or a downtrend? If price is in an uptrend, this is going to help us identify that we're using the Fibonacci retracements to start looking for bounces. However, if price is in a downtrend, we're going to be using the Fibonacci retracements to look for a reject. So heading back on over to the charts over here, let's just say that price is in a very strong uptrend where it's setting higher highs and higher lows. Well, in order to identify where these potential higher lows are going to be, we first must identify where is that clear-cut pivot low and that clear-cut pivot high. The clear-cut pivot low is going to be the lowest point of price action before a strong aggressive move up, and the pivot high is going to be the highest point of price action before price starts pulling back. Now, once you're able to identify where that clear-cut pivot low and clear-cut pivot high are, that was a terrible circle, you can then take your Fibonacci retracements and you can draw it from pivot low to pivot high. Now, when actually using the fib levels, it really depends on the overall time frame that I'm drawing them on, because if it's like a smaller time frame such as like the 5-minute or the 2-minute, I'll use the 0.5, 0.618, 0.707, and 0.786. If you guys want more information on why these levels are important, make sure to check out the free webinar that I did that's a little over 40 minutes uploaded on my channel, and I'll also leave a link down in the description. But for smaller time frames, like I said, I'll use the 0.5, 0.618, 0.707, and 0.786. Now on higher time frame levels such as, daily, monthly, weekly, hourly, 4-hour, I'll really only worry about the 50 and the 61.8% retracement. So to me, these two levels are more important on the higher time frames, but when you're using like a smaller time frame level, again, 5-minute, 2-minute, I've noticed that all of these are actually pretty important. But again, when price is in an uptrend, what we're going to be looking for is our clear-cut pivot low, pivot high, and as price starts pulling back, we draw that retracement from the pivot low to pivot high. So again, heading on over to Qualcomm, this was the lowest point of price action before a strong aggressive move up. As price topped out up here and started to pull back, we now have our clear-cut pivot low and our clear-cut pivot high. We can then draw our retracements and start looking for price to come down to the 50 or 61.8% retracement. Now, when price is in a downtrend, so price is setting a lower low, lower high, lower low, lower high, lower low, we want to start looking for rejects. So we want to be able to identify where could this potential lower high end up being. So first we must identify our clear-cut pivot high and our clear-cut pivot low. Our clear-cut pivot high is going to be the highest point of price action before price started to flush to the downside. And then our clear-cut pivot low is going to be the lowest point of price action before price started to rebound back up. Now, once we're able to identify that, we can then take our clear-cut pivot high to our clear-cut pivot low, and we want to look for price to trade up into the retracements. Again, same thing, depending on the time frame, that'll dictate which fib levels I use. On the smaller time frames, I'm going to use all of these. However, higher time frames, hourly, 4-hour, daily, weekly, monthly, etc., I'm really only going to be focusing on that 0.5 and that 0.618. So now if we break it down to a 5-minute time frame on SPY and we head on over to yesterday, we can see that overall the market had a nice move to the downside. Now looking at this chart, the highest point of price action before price started flushing was right here, and the lowest point of price action before price started to bounce back to the upside was right here. So as a result, if you wanted to look for a reject, so potentially predict where that lower high is going to be, you would take your Fibonacci retracement and you would draw it from this pivot high to this pivot low right here. And as you can see, price came right up into that 50% retracement, rejected a couple times right here, and then dropped all the way down into these lows of 524 from around 531. So again, step number one, you need to identify what is the overall trend. Is it an uptrend or is it a downtrend? And this is going to help you understand if you're going to be looking for a bounce or for a reject. And as we already discussed, rule number two is going to be identifying your pivot high and your pivot low. So again, for bounces, we are marking the low to high. And then for rejects, we are marking the high to low. Now, rule number three, when price starts trading into your Fibonacci retracement, you want to pay very close attention to price action. So when price is coming down to a bounce, what you want to look for is bullish price action. So say price comes down into the 50% retracement and you start getting long lower wicks, bullish hammers, bullish engulfings, dragonfly dojis. That all lets you know that that fib level is important. And then if you're looking for a reject, you want to be looking for bearish price action, long upper wicks, bearish hammers, bearish engulfings, gravestone dojis, just overall bearish price action. So again, if price is at your bounce level, price is in an uptrend, it pulls back to the 50 or 61.8% retracement, you're looking for bullish price action. If price is in a downtrend and you're looking for rejects and price comes into your fibs, you're looking for bearish price action to help confirm that that level is truly valid. And now the final thing that I like to look for, which rule number 4, is going to be you need to see an elevation in volume. Now, I'm not going to say that it has to be elevated volume every time. It's just when you have elevated volume at that key level with the confirming price action, it makes it so much higher probability that that trade is going to work out in your favor. Now, there will be times where it's like lighter volume when we go into the level. It's just that every scenario is different, but ideally 95% of the time there is an elevation in volume at my fib level, which is the whole reason why I end up taking the trade. Now, the reason that the elevation in volume is so important is you got to imagine that price is in an uptrend, right? It pulls back down to that 61.8% retracement. You start getting bullish price action. So let's just say a very long lower wick, but then you look at that volume and you start to look at it and you say, wow, there is a huge increase in volume at this key level that we already know is important. So all of those factors together, that is a very high probability setup. That is showing you that buyers are truly coming in at that fib level, and that is the trade that you should be in. And then vice versa in a reject. Price is in a downtrend, it comes up into your fib level. Let's just say it has a very long upper wick, but then also at the same time in elevation of volume. What does that tell you? That a lot of sellers started to come in at your key level, which again, that is a trade that you should be in. So I want to show you guys some real trades that I ended up taking using this strategy. This is a trade that I actually ended up taking last week on QQQ, and we literally caught the exact bottom. So looking at QQQ in the pre-market, that's another thing. Make sure you guys have your pre-market data on when using the fibs, because if you're not using pre-market data, you could be missing out on a lot of key information. So looking at QQQ in the pre-market, we had this clear-cut pivot low, and then this clear-cut pivot high based off of news. Now, if you were using the NASDAQ, it was a lot more visible to see the clear-cut pivot low, pivot high, but you could see the same level on QQQ. So as we see, we have pivot low and pivot high. Price pulls back to that 50% retracement. However, Do we notice any bullish price action at that 50% retracement? Not at all. But however, notice what happens when price came down to the 61.8% retracement. Yes, it's a red candle. Yes, it's got red volume. However, look at how long that lower wick is to the downside. So price bounced right off of that 61.8% retracement, and they drove prices all the way back up into here. Now also look at the elevated volume. This is the highest 5-minute volume that we had since the opening candle right here. And a majority of this volume came in on the buy side because again, we're piecing together that this level is already key. We have a long lower wick and we have the elevated volume. So all of those things together tell us that buyers are truly present at this area. Let's get a long entry with our stop loss right below this low. And as you can see, that was literally the exact bottom on QQQ before it rallied all the way up to, I don't even know what it rallied to. It went a lot higher than that. But again, this is an A+ picture perfect setup that I would take and took using my Fibonacci strategy. And then looking at a reject example, looking at ES on the 5-minute time frame, looking at this clear-cut pivot high and pivot low, you can see that price traded up into the 50% retracement, right? Did we get any bearish price action or anything to say go short at this 50% retracement? Absolutely not. However, when price hit that 61.8% retracement, right? You can see that price started to break down. We got a little elevated volume. And I remember at this time, if you broke it down to a smaller time frame, such as a 2-minute, it actually validated even more. So the 2-minute started to show that elevated volume and then bearish price action. So again, same thing. We ended up getting short with our stop loss right above this high, and we're able to capture a very beautiful move to the downside. And then here's another downtrend example. Looking at SPY, here's our clear-cut pivot high. Here's our clear-cut pivot low. Price trades up into the 50% retracement. Any reason to go short? No, nothing about the price action or volume said short it. However, when we got up into the 61.8% retracement and we started to reject off of it, and I identified that that selling pressure was coming in and the volume started to go higher, that is when we ended up getting short with a stop loss right above this high. Same exact thing. We were able to capture a beautiful move to the downside. Look at that volume off of the level. It was literally higher than the opening candle right there. So again, the higher volume isn't like always necessary, but 95% of the time it's going to be present, and it makes the setup so much higher probability when you have that elevation in volume at that key fib level. And then I'll just show you guys one more example of a trade that I ended up taking on Meta a while ago. Same thing. Here's our clear cut pivot low. Here's our clear cut pivot high. As price started to pull back, any reason to get long off the 50? Not at all. However, when price came down to the 61.8% retracement, again, I remember this trade, the 2-minute was also super bullish. But had you waited for that 5-minute candle to close, you have a very long lower wick and a little elevation in this volume right here, higher than previous candles over there, which confirmed a long entry to the upside with a stop loss right below that low. And again, you can see that that was pretty much the exact bottom here. But anyways, that's going to wrap up my very easy to use, simple trading strategy. No more breaker blocks into premium discounts, fair value gaps, hot dog 360s, whatever. Again, all you simply have to do, identify your clear-cut pivot low and your clear-cut pivot high if in an uptrend, or your clear-cut pivot high to pivot low if in a downtrend. Take your Fibonacci retracements, draw them from pivot high to pivot low or pivot low to pivot high. Look for price to trade into the fibs, and then look for confirming price action and volume. That's it. Super simple. So if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and make sure you guys tune in to the free live streams that I do every single morning at 8 a.m. Eastern time, as well as the free live day trading that I do every single day at 9:15 Eastern time. That's going to wrap up this video. Peace out.